Hey everybody, this is John and welcome to the free video. So let's talk about the markets here. I want to focus on the market leaders. Of course, big news today, the S&P 500 is making new highs, but as this is happening, we can see that some of the market leaders here are not faring so well. One stock we're looking at today is Facebook. Obviously it has had a tough time since earnings, but even here where it, if it's going to bounce, it's going to bounce here. And if it can't, if it can't, then that actually speaks volumes about money flow into Facebook, right? If that makes sense. Or just the idea that if it rolls over and dies here when it should be bouncing, I just kind of show you that money, money rotation. So where is money going into? Well, if you look at Boeing here, you can see clear money flow into Boeing. I love this weekly squeeze, all right? And so this is something where I don't have a position in this yet, but I'm certainly going to start looking at some longer term options in that. And then, if you guys have ever traded ISRG, this thing just continues to attract capital. And what I love about this is that it does have fairly predictable squeezes. And now I'm not buying it up here, but I am willing to buy it on a pullback to the 21 EMA. So today in the room, we actually placed a good till cancel limit order on some call options at a very specific price at that level. So that's when we just kind of plan it in advance. I call that an if-then setup. If the stock gets down to that level, I want to own it. Otherwise, I don't. I just want to be patient for that. But I love that squeeze here that is setting up. And then last but not least, we got to keep in mind that, here's the chart of the SPX, that yeah, it did make new highs today. But the question is it going to explode higher from here? And you want to ask yourself this, is that if you've got a portfolio that is completely based on the S&P exploding higher from here, I would just take a couple of things into consideration, namely that the rule with hedge funds is that the first test is a fade, meaning that, when you have a move like this and you come back up, you take profits. That's a fade, and then you look for some consolidation, maybe a cup with a handle pattern, and then you go with it. So I am very doubtful that we're going to explode higher from here, and we've got a squeeze here that's starting to lose momentum. Now, does that mean this market is bearish? No, it just means that you want to take that into consideration and then structure trades to take advantage of the fact that there's going to be some uncertainty here. Okay, and that could be meaning, getting long some yen futures or calls on FXY and getting long some VIX call debit spreads, or structuring your trades in such a way that they kind of benefit from the uncertainty that's going on here. And we can take a quick look at that. So, a question that pops up in a situation like this is then, because there's always something that could happen in the markets, right? But you want to trade in order to produce an income, and so you can't just not do anything. And so the question just becomes kind of how, when the market gets a little bit more unpredictable, how do you mitigate the risk? And what's happening in the market right now is it's news driven. Every day something else is in the news and you get this volatility. And it can be frustrating because sometimes you can catch big moves, but then other times you give it all back because of the big move in the wrong way. But how do you just kind of, redo everything a little bit so you can just actually restructure your trades so they're not as menacing? So an example here for me would be like, say, for Amazon. So I'll show you two examples. So for Amazon, where I was looking at this one yesterday and just going like, all right, I like Amazon here, but I don't want to wake up and have Amazon getting slammed against me. And I just, I'm just kind of focused on let's just grind out some income here. And so what I was looking at is like, well, Amazon is 23%, give or take, of XLY. So why not just trade XLY? And then on top of that, doing it in such a way to mitigate any volatility. So here you can see it's like, all right, so I bought the 112 call for $2.52. I sold the 115 call against it for 82 cents. So I have a net debit of $1.70. Now, my goal on this is just to turn this into, sell it for $2.50. Or sorry, yeah, $2.50, give or take. Now, is that going to be a huge trade? No. But the idea with this is that if I start lining up a bunch of ducks in a row like this, they become consistent income generation trades that take advantage of this current market condition. All right, here's another trade I like to do in a situation like this. And as an example here's a stock called Now. Okay. And for Now, this is one where it's like, okay, well, what's going on here? How can we structure this trade in such a way as to minimize any volatility on here. And so today, we started off yesterday with a long call at $9.84, and you can see we've got a profit in that. Today it was actually trading higher, almost at $12, and when it was trading like that, what we did is then sold the 185 call that expires this week at $1.24, because all of a sudden, when now is making new highs, traders started getting excited and they goosed the premium here. All right, and so we sold that, and so you can see as now drifted into the close, we get to keep that money. So now tomorrow, if now actually gaps down, then what I can do is look to actually buy this back at a very cheap price and then hang back onto my long call and then decide whether or not to keep it. Do I add to it? Do I leg into another one? And so by using these tools, you can really mitigate the amount of risk you're taking in your account and focus more on steady income generation in an environment that's crazy. All right, so Danielle and I are going to do a class on this, and this is being spearheaded by Danielle. She has done all the work on this, and then of course it's a lot of stuff that she's learned from things that I've done, and she's just kind of taken that and taken it to the next level. She will be doing a class on Saturday, August 25th, where she talks about all of these strategies in detail. And then there's going to be live trading on August 28th, 29th, and 30th. Now, I'll do some of the live trading as well. And then I will have, and of course, be able to dive into some of these strategies in a live event so that it shows a lot more detail. And then also, too, for the first time ever, we are going to be doing a live event in San Francisco. All right, so that's kind of a segue into, if you're interested in the strategy class, that's the Saturday class, and then there's going to be bonus psychology session from myself and Danielle later on during the week. If you want the pro version, that also includes the 3 days of live trading. Okay, and by the way, for all these, if you're a gold member, you do get $100 off. So if you look down here, you'll notice that. But if you just got to log in, and then when you go to this, it'll give you the discount. And by the way, don't tell anyone, but if you're not a member, then just do the trial. I think it's like $7. And if you don't want it, that's fine. Just sign up, at least get the discount. You know, get 30 days of awesome info, and then just cancel. But at least that way you can take advantage of the discount. Now the elite portion, so with this, it's a really unique time because you can actually participate in one of our live events for just $1,200. Those are normally, we normally do these for $5,000 for 3 days. This one is going to be, the in-person seminar is going to be a 2-day event, and again, it's going to be in San Francisco. So this is for the early bird, sorry, my writing there is horrible. So this is going to be the early bird special for this. So for $19.97, you get this, plus a ticket to our 2-day live event in San Francisco. All right, so that's what we got. If you go to simplertrading.com/5, it'll take you to this page. Of course, if you have any questions regarding this, hit us up in the room. Happy to talk about it, and looking forward to working with you on this class.